It's going to take a few minutes just for people to filter in. Right. Here we go. So this is being streamed out to YouTube and Facebook.
Okay.
All right. Okay. Let's double check everything is working. Hey, folks! For those that are joining in now, we're starting in about a minute-ish. Hey, Tom. Good vibes. Hey, Stuart. Cool. Good to see you. And Chris, howdy. Neil, can you see all of the chat stuff?
Yeah,
Cool.
I can see it coming up. Yeah.
Nice. So we've got Joanna, Alexander. Nice. Hey, folks. Right. I have a really bad admission. It's Wednesday, and this is my third packet of Gillian now. I've gone through a packet a day.
I thought you were going to say third packet today.
Sorry?
I thought you were going to say third packet today.
No, it's bad. It's Wednesday morning. I've only got 3 left. So I must resist. Otherwise, I have such weak willpower sometimes.
Yeah, when it comes to food, it's quite hard to maintain willpower, isn't it? Tom's just reminded us it's Thursday. Actually.
Oh, it's Thursday. Okay. It's been a long week.
So that means you can have another plate by the end of today.
Yeah. Right. Okay, so we've got about 31 people across the board. It's interesting. When I say I'm doing a crypto update, we get like 100 to 150 people.
Yeah.
But so folks, if you're here for crypto stuff, there's going to be 0 crypto. In fact, let's kick off. It's now 12 o'clock. And yeah, let's do this. So first question, Neil, do you have crypto? There we go.
I do. Yeah, I do, but not a huge amount. I don't have the it sounds horrible excuse. I don't have the time or the ability to research it enough. And I tend to focus very much on my own equity and debt investments. Yeah. So but I do have some. I've stopped paying into my daughter's junior ISA and started buying crypto with it as long-term hold. Yeah. And I only have 2 types. I have Bitcoin and Ethereum, and I have less than 10 grand's worth. So nothing substantial.
Fair one. Cool. Right. That's probably the last time we talk about crypto today. So for everyone that's just joined us, this is a good chum of mine called Neil. Sexy looking guy over there.
Thank you very much.
Dapper white shirt over there.
I ironed it about 2 minutes before we came onto this. So,
it's better than me. I am sat in my underwear at the moment. So,
nice.
Right. So Neil is a fascinating bloke. He is, I don't know what to call you. You are a financier. You're into private equity. You do all sorts of stuff. You've recently bought, was it like a trust fund or a pension fund? Like, you do all sorts of stuff. But I guess from my knowledge of Neil over the years is that his core skill is extreme financial engineering and, I guess, capital raising. I mean, is that a fair shout?
Yeah, I think so. Yeah, I mean, it's kind of moved on a bit from that. So my background used to be in kind of consulting, product structuring, capital raising. And then it kind of took another turn. So I started then consulting with private equity groups, advising them and guiding them on growth structures, cross-selling between them. And then I naturally moved into the advising side of that. And now as a progression, I've just exited the private equity group that I was involved in for the last 2.5 years now. and set up my own consultancy, advising and guiding predominantly SMEs, because that's where the biggest area of opportunity of growth is, but also very heavily involved in kind of thought leadership in private equity side of things. Yeah.
Okay. And what size SMEs? Because I mean, isn't the definition of an SME anything from like 10 staff to 1,000 or something like that?
Yeah, I mean, to be honest, it doesn't really matter in terms of the advice. I mean, I'm working with a small financial services group at the moment, which is 5 people looking to kind of build up. But I'm also quite happy to work with. I mean, that's one of my current clients, but I'm also quite happy to work with the group I've just exited. 65 people, 36 million turnover. So it just varies, and it's all about growth and mindset. And I think what we find is that a lot of people in the smaller end of the sector start off a business, and then it grows, and then it gets to a certain point, and their own mindset or ability stops them taking it over that ledge to the next level. And it depends on the person what that level is. It could be that they just can't see past the 250,000 turnover barrier because it blows their mind. Or it could be that they can't see past the responsibility of taking on a new team to support what's already there. So a lot of it is mindset stuff, but it's all about kind of educating people, taking it to the next level. Do we grow by acquisition? Do we create organic growth? Can we penetrate new markets? And it's more about getting people to think outside the box than it is anything else.
Okay, and so I'm just trying to sort of dial down who exactly you can help. So what about one-man band businesses? Are they too small? Like, so with your skill set and the things that you do, like, so how many staff to how many staff, or is it a turnover-based thing?
It doesn't matter. I think when you say is it too small, I think the truth is, if I'm being really honest to myself, it's are they too small to be able to afford my time? Because over the years and the experience that I built up, I have become more expensive, but I do provide great value for that. So if there's somebody who's looking to draw on that experience and help build a plan and drive something forward, I'm quite happy to look, but I do want compensating for my time. And I know that sounds very crude to talk about money in that way. So yes, I would happily look at that, but it's not my core market. My core market is probably 40 employees up, probably turnover of 5-6 million plus, and help take it to that next level. That's my core market.
Okay. And so when you do, let's say someone comes to you and they want to raise capital, like what chunks, what size capital do you raise, and like via what medium?
Yeah, it depends on the model, really. I mean, there's a clear definition between debt and equity, and if they're looking to sell part of their business and expand through skill set as well, we would look at raising capital against equity. Normally, if somebody's got the skill set in house or can hire that skill set externally, I would always advise not giving part of your business away, and we'd start looking at raising debt. So we would create corporate notes or structured loan notes, and look at debt options. And my favorite is always debt. I mean, it sounds silly because I've been in the private equity space for a while and I've got my own small PE group. But my preference is always debt. If you're running a business that can afford it and you want to retain control, and you've got the good team in place, I would stay with debt all day long.
Okay, so we're going to have to go backward a little bit. So I know so I'm imagining there's not many people here that are familiar with the terms corporate notes or structured products, etc.
Yeah.
Can you just break that down? Like, what is a corporate note? What's a structured product, etc.?
Yeah, so a corporate bond or a loan note is simply that. It's a promise to pay. So if I put together a structure that, let's say between you and I said, Simon, can I borrow £10,000? We would put a loan note in place. It would be a facility agreement. And it's the same thing, but aimed at a more corporate level. So if you were to want to raise £10 million worth of capital, and there's certain marketing rules around it which are quite complex to navigate, but we would structure an information memorandum, we would structure all the marketing material, and then we'd take that to the market. And typically it would be high net worth, sophisticated investors, institutions, and we would go out there. And the information memorandum is the Bible of that. It tells you exactly, or the investor exactly, what the borrower is going to do with the money, and it sets the guidelines of what you can do with the money. So if I was raising capital and I went to the market with an investment memorandum that says I'm going to invest in solar projects, and I went and took that and I invested in crypto, for example, that's a breach. I'm breaking the law. I can't do that. But what it does do is it highlights the risks to lenders as well. So if you were to take a crypto bond to the market and it said, I'm experienced and this is my background, and then I did it and I said, I'm not very experienced in crypto, this is my background, not very good, I'll probably lose your money, and I go to lose and I take the money and I lose it, there's no comeback on that because we educated the investors of the risks prior to actually investing. So it is the guidelines, it's the kind of Bible of what you're going to do with that money, what the risks are associated to that, what your background is, what your education is, what team you've got behind you. So it's not a sales document. It is a complete outline document. If you give me money, this is what I'm going to do with it. And then you've got the marketing support for that, which has to be signed off to show that it's true, honest, not misleading, and not biased in any way. And it will say, this is our team and this is how experienced we are. That's what you use to sell it. So you've got two documents, really.
So you got the first document is the IM. What's the other document?
Marketing. So
the market. Okay.
Yeah.
And so what's a structured product then for the listeners here?
So a structured product typically doesn't fall under debt raising. So a structured product will be something like a kick-out fund or something like that. So
and what's a kick-out fund? Sorry.
No, it's fine. So if you look
we're all 5-year-olds here.
If you look at Investec, for example, on their structured products, they have some great structured products. So a kick-out fund will be, let's say, it will track the FTSE for a period of 3 years. If it's up at a certain point, you will get X amount. If it's down, it will kick you out of the product, 2 years into a 3-year period or something. Investec are the king of structured products, but they work very, very well and they raise billions and billions a year into them. They've got great track record. I think Investec, and I can't remember the exact numbers, but I did do it as part of research. I think Investec have created X billion for their investors, and it's only ever fallen down, say, once in the last 12 years. They're really, really strong products. Very, very good.
Blimey. Okay, so so let's say you're a company, you want to raise some debt because you don't want to give away equity. Mm-hmm. Let's say they work with you, they come with you do all the creating the information memorandum, the marketing, etc.
Yeah.
Is that all FCA compliant? Because how does that fall under with the FSMA?
Yeah, so it is FCA compliant if you raise the money yourself. So if you're the issuer of that product, so it's your IM and it's your marketing material and it's linked to your company. If you're the issuer of that product, it's compliant for you to raise that money. If you then put that out to a third party to raise the money, that third party needs to have the FCA permissions for arranging or bringing about deals and investments.
Yeah, so that's a regulated activity, isn't it?
Yeah, that's a regulated activity. Weirdly, it's not a regulated activity if you raise it yourself. So if you go out to the market and you reach out to high net worth, sophisticated, there are rules and regulations in terms of how you onboard them. There's certain compliance steps, but you don't need FCA permissions to raise that capital.
But so is the crux there, you have to only go to high net worth or accredited investors? You can't just blast your IM and marketing doc on Facebook, for example?
No, you can't. And there's very strict rules around it. So it comes under the FSMA 2000, so it's Financial Services and Markets Act 2000. And they used to have what they call Section 21. So it gets really technical and boring, but as long as it's signed off by an approved person, so a regulated company, under Section 21 of the Financial Services and Markets Act 2000, then you can promote that to what's called a retail or restricted investor. But I think it was January 2020. The FCA completely removed all that. There's no restricted or retail investor that can be marketed to on these type of product.
Okay.
So it's high net worth, sophisticated investor or institutions, really. And I think the definition for the FCA's high net worth needs to be reviewed. So in their eyes, a high net worth is somebody who owns over £250,000 worth of assets, not including their main home or pension provisions, or earns £100,000 a year. Well, in today's society, that's not a high net worth. And then there's other rules around what they consider a sophisticated investor. I can't remember what they are.
Sure.
But it's either that or institutions. But the real money comes from using a third-party firm that have access to high net worth and sophisticated investors, and you have to pay away some of your profit, or have to pay pay away some of the capital. But if you build it into your cost of capital, that's a real way to raise money.
Okay, so who are these third parties that have this network of?
Could be financial advisors. Could be financial advisors. There's specialist capital raising companies out there. There's agent networks. But realistically, there are people now that have structured themselves to sit in this marketplace, and they have relationships with family offices, institutions, high net worth and ultra high net worth clients, and they will take them out to them directly, but they carry the permissions. But you would normally pay, say, 2 to 3% of your capital raise away to them.
Okay, and what's the normal APR or APY when you do a cap raise?
Well, people flooded the market with high interest products, so 12, 15, 20%, and the market suffered from that because people got carried away, investors got carried away. It's mainly retail investors, and I think that's what caused the problem. Investors got carried away quite heavily with kind of being tempted by the reward, not the risk. But now I think between 6 and 8%, something like that.
Really?
Mm-hmm.
So let's say I wanted to go out and borrow £1 million through a corporate note, and offer 6 to 8%. Plus, I'll be giving away that 3% to the third party with that network. So I'm looking at sort of 10, 12%.
Yeah, I mean, if it's let's say that you're offering easy figures 6% per annum, and it's costing you 3% to raise that, and let's say it's a 3-year bond. So in 3 years' time, you have to pay all the money back. So you amortize the 3%, so it's 7% per annum, and that's what your commitment would be effectively. It's the thing is, if you look at the channels in which it's being raised and compare it to, so institutional or ultra high net worth investors are more focused on security than they are on return. They want a safe haven for their money. So if you're securing it against, let's say you're doing a corporate bond, you've got a security trustee there, and you're securing the £1 million that you want to raise against £1.5, £2 million worth of assets, be that shares in the company or property or whatever. For them, they're secured, they're happy. So 6, 7% is better than what they would get in a high interest account with their private bank. But they've got the security to recall on. If you're saying, look, I'm going to do this as an unsecured, unlisted loan note / corporate bond, you've got to be looking higher. So it's all about risk and reward. But if you're doing it unsecured, you're not going to raise big money because people are too wise to that. It's just a pump. What used to attract the bigger money in unsecured is retail investors, and the FCA has taken it out, and quite rightly so. I would say that the FCA are people that often kind of react a bit too late, but in this instance, they did a very good job.
So, if you were to raise, say, £1 million, how many people on average would stump up that million? Like,
Well, that's down to you. So you set the terms of the investment. So in the IM, you can say, look, we've got a minimum investment of 100,000, or you can say we've got a minimum investment of 10,000. And it's always the balance, right? If we look at investor-borrower relationship, the borrower wants to borrow as much money as possible over the longest term for the lowest with the least security. And the investor is the other side of that. The investor is, they want as much security, as much return over the shortest possible time. So you have to balance that. And part of that play that comes in is how much does the investor need to put in to test the water? Now, to the average person, £10,000 to put in is a lot of money to test the water. If you're dealing with somebody who's worth 250 million, 500 million, ultra high net worth, for them, they'd drop £100,000 on, like it's a meal. So it depends on the market, and it's testing that market. But the strange thing about it is that the stress comes in the capital raising, not in the administration. So the administration, if you've got one investor or if you've got 100 investors, it's still easy to administer. The stress comes in the capital raising. So if you think you can get 10 investors at 100 grand each, and that's easier than getting 100 investors at 10 grand each, then it's a balance of, but the ball's in your court. You decide how you want it to look and feel.
So, okay. So let's say I want to raise £1 million. I've got some sort of security. What are the other costs? It can't be as easy. Oh, in fact, yeah. What are your costs? So let's say I do it through you.
Mm-hmm.
Let's say we created a loan note giving 8% per year, plus that 3% in that network. So that's 11%. What are your? So you would then facilitate all of that?
Yeah. So I would work to get everything ready. I'd use my in-house lawyers. We get everything prepared, so it's all ready and legal for you to take to market. We can make the introductions to the capital raising firms, and depending on how secure it, or not how secure, what features you want. So if you want a security trustee, for example, trustees need to be formed. If you want it unsecured, that's cheaper. But typically, for me to structure something like this is between 25 and 35,000, something like that.
So just go back one. Security trustee, who would that be?
Yeah, so it could be anyone. A whole number of FCA regulated security trustees out there. So you could use a third party, or you could set up your own security trust company, and you can put the security in there, and we build the trust deeds between your own security trust company and the capital raising company. But
what would the security trustee do?
So if you've got a third party trustee, if you default on your loan, for example, or your obligations, the trustee will come in and they will take possession of the securitized assets on behalf of the investors, and then they will liquidate them and sell them.
Okay, fair enough. So, do you always have to have a trustee?
No. It's down to you. You can have what you want.
Okay.
You can have what you want. So if you don't have a third party trustee, and let's say you don't, I mean, if you're securitizing it, you need it. But if you're doing an unsecured loan note, which would be very hard to raise capital, you don't need a third party security trustee.
Okay. So let's say, let's say I create a new company and it's going to be sort of like a crypto fund, and I want to raise, I don't know, £1 million or £5 million, and the object of this fund, I guess it's sort of a fund, or this company, is basically just get as much crypto as possible during this dip.
Yeah.
So we go out and raise whatever APR plus the 3% with that network, plus your 30, 50K or whatever.
Yeah.
Obviously, this is going to be somewhat of a new entity, or I could do it through the real estate trade or whatever. Let's say there's no collateral, there's nothing. There could be a debenture on the business, but let's say there's no, I guess, collateral. Yeah. What is the what is the percentage probability that it will get funded? Because I could spend all that money, say 50 grand going your way, you do it all, but then no one invests, pops up with debt.
I think it does all come down to the securitization. If you're looking to raise, say, £5 million, and you've got there's a debenture there for I don't know, £500,000 or something like that, it would be very unlikely. If you've got, I mean, you're I say fortunate. Fortunate's the wrong word. You spent a long time building up great credibility and a kind of brand behind yourself, and you can leverage that in replacement and security. So you've got that trust element. I think realistically, I think you'd struggle to raise 5 million. I think if you want to raise £1 million, you could probably do it.
Okay. So what would you say the probability of raising £1 million then?
Depending on what channel you go down and who you raise the money from, I think you'd probably be 70-80% likely to raise £1 million.
Oh wow, so it's pretty high then.
Yeah.
And so how would the repayments work with that?
So
yeah,
again, you set that how you want. So you can set it at the end of the term. You can set it so
interest only or whatever.
Yeah. I mean, it's all interest only, and capital is repaid at the end of the term. But you can pay biannually. You can pay at the end of term. You can accumulate. You can even have it so it's a compound interest. So just reinvest every year. It's completely down to you how you want it. And then we would just document that so it's accurate and it's fair and it's understandable to investors.
Okay.
There's actually a story out there, and I know the lawyer who drew up the IM. But there's a story where a guy fancied himself as a bit of a hedge fund manager, but he was very, very underexperienced. And he lost a lot of money. He had lots of contacts. He raised a lot of money, and he lost about 250 million, but that sounds a lot more than.
Holy shit!
It was definitely in the hundreds of millions.
Jesus.
And he went to the lawyer, absolutely shitting himself, and he said, "Listen, I've cocked up. I'm going to prison. I've messed up." And the lawyer said, "Well, let me look at the IM." And he looked through, and he said, "Well, in the IM, it says that you're very inexperienced and you probably will lose all their money. So you're covered." And there was no legal recourse. There's no legal recourse. There's a massive moral recourse, but there's no legal recourse. And I think, if we look at, what was it the FCA said about, I think it was ETNs. The FCA did a talk on exchange traded notes. And they said then, sorry, I just seen a question from Chris. I'll answer that. So I'll come back to you in a second. So the FCA did a talk on ETNs, and it said quite openly, look, we know X percent of people, I can't remember what it was, X percent of people lose money on ETNs. But we don't care about that. What we care about is the people that do lose the money are pre-educated before they go into that. And it's exactly the same with the IM. As long as people are pre-educated to go into this investment, which it's a debt-based investment, and they know the risks and they've taken their time to balance them against rewards, then that's down to them. Chris, just a quick question. Could you get investment for 1 million from 10 different investors, investing 100K each, or would the investment just come from one high net worth individual? Any way you want it, Chris, it completely depends. So if you wanted, if you wanted to raise £1 million, I mean, we've done it before. We raised for the private equity group. Well, I say we took to market a 25 mil cap raise, and we had one person pledge for the 25 mil. We've also done it the other way. I say I've now left that, but 250 million per annum raise, and they think that they can fill 100 million from one client, and then the other 150 million will probably come over another 5 clients. So it's entirely down to what investors are on the table and what the offering looks like, what it feels like, what it tastes like. Jesus.
So let's go back to this hypothetical crypto. It wouldn't even be called a fund because you're not managing money. It's you'd be setting up a LTD, a new fresh
Exactly that. Yeah, so you would set up an SPV, you'd set up a little special purpose vehicle that's designed purely for that. There's no other trading activity, and then you would structure the loan note or the bond, which is the same thing. Don't get caught up in terminology. A corporate bond is a loan note. So you would link the loan note / corporate bond to that SPV, and the sole purpose, the sole operating model of that SPV will be. I've just seen Steve say, "Can we have 10 minutes of crypto, please?" The sole purpose of that SPV will be to operate on behalf of that loan. It doesn't have to be like that. You can raise it straight into Realistic Trader if you wanted.
Okay. So that's what Michael Saylor just did. So he just raised $500,000 and just spunked it all into Bitcoin. So that would have been gone. Sorry, excuse the word. Sorry. Okay. So treat me like I'm a 5-year-old idiot here.
Yeah.
I go, Neil, let's do this. YOLO. What could go wrong?
Well, I mean, you would know from the crypto side what could go wrong.
Oh, yeah, ignore the crypto side. I meant yeah.
Well, there may not be any capital raised, and I've earned a fee out of it, and it might not appeal to the market, but some of the people that we work with, they do this, they test the water. So we all sit around the table and we say, look, this is how it's going to look and feel. These are the people that have relationships with family offices worth, billions. They have relationships with institutions, ultra high net worth investors. So we sit around the table and say, look, this is how it's going to look and feel. What do you think the appetite is from your investor network? And they'll be honest. They say, look, they'll never go for that, or they may go for this, but that's always a risk, right? The risk is always not being able to raise the capital, and the costs are front loaded. But we try and mitigate those risks as much as possible by sitting around the table and saying, look, how does it need to look to attract the interest of the investors?
So for those viewing here, the reason I'm asking this is that in 2017, I sat down with Neil and we were like, dude, it's all about Neo and gas and all that sort of stuff. We need to set up a freaking Neo fund, yada, yada, yada. And I've got the worst memory. So I've literally, all of 2017 is pretty much purged from my memory. I was looking at the chart today. I was thinking, even though we're in a bit of a dip, we would have made an absolute freaking fortune.
Yeah, you said this to me. It would have been millions, wouldn't it?
Yeah, it would have been like 8-9 figures. Why did I walk away from that? Why did we not follow through? Was it the front loading costs? Is that what?
No, I don't think it was. If you remember, we went and sat down with a lawyer. We
in London.
We went with a lawyer, and that's still the lawyer I work with today.
Okay.
We went and sat down with him, and the truth is, I don't really know why we didn't push through with it. I think you were busy, I was busy, and then it kind of got pushed to the side. But we'd be doing this from a nice beach somewhere in a hot climate now.
There must have been a reason. Why did?
I don't know.
Were the upfront costs not like 80 grand with like a 50% chance of funding? Is that what it was? I can't remember.
Could have been. That lawyer was very expensive. He's now involved in another firm that was a very, very expensive law firm, and he's a very, very good lawyer. But it could have been. I can't really remember.
Interesting. So what's stopping us from doing it now then?
Nothing.
Right.
There's I think now actually, although the crypto market, from my limited knowledge, has moved on quite a lot. I think it's I think that because there's been a lot of scams out there as well. There's been a lot of kind of launches and money disappearing and this, that, and the other. And you know more about them than I do. I think whilst the market has matured, it's also caused nervousness. And there are a few out there. There are a few operating out there that are raising capital. That I could access details of, and we could look at how they're doing. But it's definitely something that we could do.
Sweet. Yeah, we're having dinner and drinks in a couple of weeks, so we'll have a chat more then.
Yeah, yeah, sounds good. I've just seen Chris's offer. I'll pass on that if it's all the same to you. Thanks.
So I'm going to ask a few more questions, but folks,
Yeah,
for those of you listening, please type in your questions if you have any questions, because and by the way, I have zero affiliate links or commercial affiliations with Neil. Like,
right,
if any of
right.
you contact Neil, like that, I make this. I think this is just really good info. So, how the hell did you get into this? Where the hell did you learn all of your knowledge? Because I remember, in fact, I remember back in 2017, I was sat with you. I don't know where it was, probably around my house, and I was asking you about, all the bond stuff that you do. And at the time, I thought I was pretty switched on. And then a lot of your words just went over my head. And I was like, okay, I know a lot less than I thought I knew. Like,
Yeah.
where did you learn it all?
Self-taught. So back in when was it? When was it? 2011. I got into alternative investments, and I set up a brokerage, and that brokerage grew to be the largest in the UK. And we were raising a lot of money, mainly into kind of commercial property investments and so on. And then the industry changed in 2013, January 2013, to very much what we experienced again in 2019. Sorry, 2020. So we were operating, we had affiliates with lots of pension companies. We were raising money through pensions and so on. And then the FCA did a blanket, January 2013, no more access to retail investors' pensions and so on and so on. So that just kind of collapsed. It collapsed the market.
Yeah.
So I spent 12 months, and yeah, we did very well out of that. And I spent 12 months going into sorry, just in Samantha's comment, trying to save things and fix things and turn them around and so on. And actually, that was my biggest lesson there, which was, you need to know when to hold them and know when to fold them in business. And it was a big lesson. And then we got to the end of 2013, and my daughter was born that year, and we had nothing left. Like we'd lost everything. Just to point out, the investors didn't lose their money. We were introducers and brokers to third-party companies. So the investors didn't lose out, but our business was really struggling. So end of 2013, I sat down on Christmas Day, couldn't afford to buy my daughter a Christmas present for her first Christmas, and it was as kind of tough as that. And I got out my laptop Christmas Day, and my daughter's mum said to me, "What are you doing?" I said, "I've got to find a job. I can't do this anymore." She said, "You're not." I said, "No, I am." She said, "Look, in 3 months' time, you're going to walk past a Bentley garage and know you'll never own one, and you'll get 3 months down the line and you'll quit your job and you'll start a business. So close your laptop today and tomorrow start something else." And we did, and we set up me and her together set up a financial administration outsource, and we started advising financial advisors on structuring products and so on. And then as that market became really saturated, I moved very heavily into the ISA world in 2000, and I think it was 2018. So we started. Just reading Steve's comment.
Yeah.
Good, yeah. And well, I've got some more on that, Steve. I'll come to that in a bit. But in 2018, I got very heavily involved in the ISA sector. And this is where it really developed, because we kind of pioneered, and I say we, it was myself as a kind of almost self-professed consultant. And I looked at the ISA market, and there was a big gap there to structure corporate bonds and list them onto a recognized stock exchange, an HMRC recognized stock exchange. And then you can raise capital for exactly like the projects you're saying. You can raise capital through stocks and shares ISAs. So companies were then coming to me saying, "Look, we want to raise capital. Can we structure a product?" I said, "Yeah, no problem at all. Do you want to raise it through ISAs? Do you want to raise it through cash?" If it was raising through ISAs, I was then working with a corporate broker that would list them on, say, I don't know, Cypriot Stock Exchange, for example, which are recognised exchange, or the Irish Stock Exchange. There are a couple of others which are easier listing than any Next Exchange or LSE or whatever. So they were then working with ISA managers to raise capital. So it just developed, and what I found is that I kind of built a name for myself in the city, but I also kind of built a name for myself internally. There was one guy who kept saying, Neil, I want to use you, but you're too expensive. And I said, I know, but I'm the only person doing this. And eventually it came back round. And he said, everywhere I go in the city to do this, he said, I keep getting your name come up. And I found that kind of real niche. And then it developed in 2019. I held a seminar. It was an investment seminar. It was a Bulgari hotel in Knightsbridge. And a guy came along to that, and I was kind of doing the seminar all about investing, structuring, building your business and incubating. And that same guy approached me afterwards, said, look, can we do some work together? And then he had an idea for setting up a private equity fund. So I've been working with him, who I've introduced you to actually in the past, working with him for 2.5 years. And that's one of the businesses under that private equity group was a startup. We started up in April last year, and we turned down an offer to exit that for 10 million just before Christmas last year. Oh. And looking at the projections on that, that should be, I think, a 90 to 100 million pound exit in 3 years.
Jesus.
Of that one business alone. The whole group, it's got some that are struggling a little bit, but on that one business alone, 100 million exit.
That's nuts. So, geez, I don't know where to go now. I'm not know where to go. So, what's next for you then? So you've branched out now. You're doing your own private equity firm.
Yeah, so I've got my own small private equity group that I've just set up. But that comes. So that's Mode Investment Group, and then I've got Fintrex, which is my consultant company. But Fintrex really will specialise in kind of assisting SMEs to grow to that next level. But also, one of the specialities will be in troubleshooting and saving failing businesses. But there's two sides to that. The consultancy side is obviously great and it's exciting. You get involved and you charge a fee for that. But the failing businesses, I will go and implement turnaround strategies. But instead of, because they won't be able to afford a fee, I'll take an equity chunk and put that into the private equity. So instead of actually parting, it will be sweat equity more than anything, and business saving and turnaround. But I'm working with a production company towards the end of this year. It was meant to be last year, but we're filming a pilot for a TV show then, which is almost like Ramsay's Kitchen Nightmares, but we go into troubled businesses and implement strategies. And so it's like Neil's Business Nightmares, but I think we'll come up with a better term for that.
Yeah, that's amazing. And so with Mode, your PE firm, what sort of businesses are you looking to invest in / acquire?
So because that's a kind of sideline to the consultancy. Anything that's in trouble that I think I can save, I will put into there. But ultimately, it's strange. I've been eyeing up other consultancy training and development firms that can benefit Fintrex as well. So we can create a lot of cross sales and so on. But for me, it's anything of opportunity in the SME sector that Mode can get involved in. See, business is simple in some ways because people think that the complexity of business is tied up in kind of mindset or detail or whatever. But ultimately, business is the same, whether it's you're selling a service or a product. It costs X amount to either buy that in or deliver that service. It costs X amount to process that. And if you can make a profit over that. And I think when you strip away all the noise, when you strip away all the distractions and take it back to its bare roots, I think that's where Fintrex really excels, is stripping away all the shit that sits around it.
So let's bring this back to more of the audience. So I'm assuming, what have we got here? We've got a bunch of people on YouTube. Oh yeah.
I want to say something to Steve actually on his comments. So Steve, it absolutely does break you as a dad, because there's no denying that the way we build these things and the way that we structure these things is on the basis that we do it for the love of our children, and we want to provide the absolute best that we can at all times. But I think and when times are tough like that, it's so hard to dig deep, and it's so hard to go, do you know what, I'm not going to get swallowed up by this. I'm going to push, I'm going to drive, and I've overcome that 2 or 3 times. And that time in particular that I was talking about, I have to be honest, I don't think I would have found my way as quick if it wasn't for, and I say my daughter's mum, we're not together now, we're still very good friends, we get on very well. But if it wasn't for her believing in me, I would have found it harder to believe in myself. But yeah, it's my sole goal from then, and also I kind of went downhill a little bit in back end of 2018. I think it's 2018, might have been 2019. My sole goal was to secure my daughter Ilo's, to secure her future. And we're fortunate now that if everything stopped today, my future is secure and her future is secure. But I think the hunger in me wants, there's never enough that you can provide for your children. And it's interesting, I was in London yesterday. I was traveling from my office to Liverpool Street, and there was a cabbie, and we were just chatting. I said, do you have children? And his response was actually quite humbling. He said, no, I don't. He said, because I don't earn a lot. I'm not built like that. He said, and I'd want to give them the best of everything, and I don't want to be the one to let them down. He said, so I made a life choice not to have children. And I found that quite interesting. That he didn't have children because he didn't want the pressure, or he understood himself better than to not be able to give him the best of everything.
Yeah, that's not often you come across that.
No, it's not often you come across people that don't have children.
Yeah, as in that.
But let alone that mindset.
So, what's your ultimate goal then? Like, do you have an end target? Do you have what is your goal moving forward?
Yeah, I don't know, and that's a really shit entrepreneurial thing to say. I'm at the point in my life. I turned 39 last week. And I'm waiting for all the comments to come up, say, "Oh, you don't look it, you look great." I turned 39 last week. I'm in a relatively new but very happy relationship. I've got a beautiful house that's paid for, and I've got a business that I really enjoy. And I think this is the first time that I can honestly say I feel fulfilled. I have a lifestyle that I want to maintain, but that lifestyle isn't 5 million, 10 million pounds a year. I want to do something that I continue to enjoy. Oh yeah, cheers, Steve. Thanks. You look 41. I want to do something that I continue to enjoy. I want to continue to provide for my girlfriend and my daughter. And that is pretty much where it is. I feel content, I feel happy, and I want to continue helping businesses.
Yeah.
That's a big shift for me. 3 years ago, people are saying, look, what's the, in fact, I did an interview, I think last year, where I was building a $500 million exit strategy with this PE firm. And actually, I found that I was at the point when I was with them, I was at the point where I was doing it more for the money than I was for the enjoyment. And I didn't need the money, but I really thrived the enjoyment. And I think that's where this turn and change is.
Yeah. Nice. So let's bring this back to, I guess, the bulk of our audience. I'm guessing most people here listening today or the recording in the future will be one-man bands or very small biz owners. So let's say you have, in fact, let's take my wife. My wife is effectively a one-woman band. She's got My Fairy Pen Pal. We're looking to raise 100K for that business. What is the best course of action for her? Because this is something we've been chatting about, whether we try and raise 100K via debt. That's the preferred option. I completely agree with you with debt. What would you recommend to her?
Well, I mean, I hate to tell you, Simon, but I've been speaking to your wife.
That's where she's been going. No.
Yeah, sorry. But no, look, debt is always preferred. It's hard to raise debt for
new businesses.
It's hard to raise debt. I think if you're negotiating equity at that rate, I think you probably have to take a hit on it because it's a new start business. But always, when you're going into something, and this is what a lot of when you're going into
Cheers, Ed.
yeah, have you really got 99 friends? Yeah, so when you're going into something like this, don't always look at the entrance, look at the exit. So if you've got a solid business plan, and again, if you have your raised capital, find your way out. You know, say in 2 years' time, I want to be able to buy that back. So if you're having to give away equity because it's your only way to raise capital, don't look at the way in, look at the way out.
Yeah.
You know, you've got to have an exit plan as you build the entrance, and that's the key thing. I mean, you hear about it, you see it on Dragon's Den, for example. It's coming in. It's coming
this
in.
Is how you raise capital.
So you see on Dragon's Den, for example, the shrewd people are saying, look, if I hit my targets, can I buy that back off you, or can I buy X percent back off you? And that's exactly how it should be. And as an investor, to me, people will turn around, and if people ask that, it gives me confidence that they're going to deliver on what they want. Yeah, sure. Yeah. If you can deliver, you can have some of the equity back.
And so what sort of uplift let's say Ellie was going to do this, and let's say she was going to give away 20% for 100k.
Yeah.
What sort of uplift would the investor like to be bought out back within, say, 3 years, if that clause was in that contract?
If it was me, and it was a fairly new start and it was a risky business, I would want to, in 3 years' time, I'd want to see typically 15% a year growth on my money.
Is that all?
Yeah.
Blimey. What? So, and other investors are like that. So if they put 100k in, and they're into a brand new company, where, as you said, there's a lot of risk, and let's say there was an exit clause, to get that 20% back, you'd only want, say, a 45%.
The way it would normally work is that if I own, let's say I own 20% of My Fairy Pen Pal, for example, I would look at the business projections over the next 3 years, and I would see what the share value of my 20% would be in the next 3 years. And if those targets are hit, I know that my exit will be X. Yeah. So, it's always looking at the projections and then balance that off across the share value.
The trouble with a brand new startup for growth like that is that there's not going to be any divvies for the first couple of years, because they'll just reinvest everything into, Facebook ads. In most cases, the business, I'm not talking about Elliot, but in most cases, the business owner wouldn't be able to get the equity to buy you out.
No, but then what you have got is you've got a more stable business model there that you can raise the debt against to buy out.
Yeah.
You're 3 years into a model.
Yeah, fair on. Yeah, Peter Walton, that's what I was confused about. So, in fact, I'm still confused about that. So, yeah, can you go over that a bit again? So you said only 50%, 15. So,
well, if you take Ellie's business, for example, right? Yeah. And I haven't seen the business plan over the next 3 years. It's 100 grand, right? So it's not a huge amount of money. But I've looked at the model to know that it's got a good market. It's got it's very attractive. It's a sticky product, and so on and so on. So yes, my money's not securitized against anything other than shares. The assets within the business are minimal, but it's a good model. And it's something that, again, and I get what you're saying, Peter, 15% with that level of risk. But if we listen to what I said a little while ago, my model at the moment, and where my end game is working with the businesses. I'm not in it for the money. I want to see that incubate. I want to see that grow. If I was going into something that was a £3 million business, could be a £10 million business in 3 years or something like that, it would be completely different. But with a business like this, the fun for me, and this is probably where we're wrong on the comparisons or misplaced on the comparisons. The fun for me is turning this into a really, really strong, exciting business.
Yeah. Fair on. So Gary's then said, I've been mulling over one particular business idea that I believe could become huge, but it's too big for me to consider launching in logistical, financial, and personal terms. Is there a market in selling business ideas with or without my ongoing involvement? You go first, Neil, then I've got an answer for that as well.
Yeah, I was going to say very much there is, depending on the idea. So, there's licensing models. There's structures where you can go to somebody who's already active in that marketplace, and you can kind of build structures with them. In fact, Gary, years ago, I had an idea for a product, an add-on product that could add on to JCB, and I had a meeting with JCB years ago about this idea. And it got to the point where actually it wasn't a great idea anyway. I thought it was, but they took the meeting, and it took me a long time to get the meeting. But yeah, very much so. If you've got an idea for a business model, I'm more interested in why it's too big for you to consider launching, though. Is that a kind of mindset thing, or is that the initial investment, or is that just kind of what your personal circumstances are in terms of existing commitments? That's a bit I'm more interested in. But yes, very much so. A short answer is yes. There's a market in selling business ideas to the right people.
Yeah. So my personal 2 cents on business ideas is that ideas are worth jack shit. Like they're probably worth 1% of a whole idea. Execution and implementation is absolutely everything. So I do actually relate to this question, Gary, because in my head I've got probably 5 or 10 different business ideas bouncing around my head, which I would love to do if I was at a different part of my life, and also cash. Like I think I've said in previous ones that over the next 20, 30 years, I'd really, really, really love to have a nanotechnology research center. So I would like to get some of the best savants, the best child scientists and old scientists around, give them all a lovely wage of, call it 200 grand a year, put them in a massive building with any form of technology they want, and a near, a massive spending budget, and then give them 10 years and basically let them play around with cool shit for 10 years. And then I would be the commercial nose going, oh, that's a cool bit of tech. I can then commercialize, bits of the tech. Now, it would be a cool idea, but for me to go and do that right now isn't the right stage of my life, logistical, financial, and personal terms. And I've got a few other things, like in fact, there's another business which I am definitely going to do in about 3 years, but it needs 3 years worth of time. But a lot of people that I've spoken to, other investors, other PE firm people, they really don't give a shit about the idea. Ideas are a dime a dozen, and the graveyard is full of billion-dollar ideas. It's actually just going out and doing it. If you look at Airbnb, their original pitch was just like ridiculous. Like, the reason it's called Airbnb is because they were providing air mattresses for people. And so I think the original idea was like, hey, we're going to give households air mattresses and people can come and sleep on those air mattresses. Give me money. And they obviously refined it. And then they had a massive fundraise. But yeah, I don't know. It's just my 2 cents.
Yeah, I definitely agree with that mindset. But I think if you've got somebody who's active in that place, and actually, Peter said something.
Yeah, I agree.
Peter? Can you prove the business model on small scale? So, no, it's not
MVP.
That.
So he was referring to like doing an MVP, minimum viable product.
Minimum viable product. But there was something else. Perhaps I just imagined I read it on there. I think, or it might have been something you said actually, Sam. I think it's when you said they're a dime a dozen. You're right. I mean, you could have a new idea for a tool, for example. I don't know, a new idea for a drill, and you take it to DeWalt, and DeWalt may develop it, and they may take that to market, and they may pay you a penny, if that, for everyone they're sold. Whereas if you started a new brand and you put all the legwork in and the execution at the start, you're making 60, 70 quid per sale. So the money's definitely in the execution. But if the idea is there and you want it passive, and there's somebody who's already in that model in that marketplace that you think to sell on, Peter, you're not going to get rich off the idea unless you execute it. But there might be a way to kind of generate a passive income from it.
And there's one other thing. In fact, I that I've seen happen a lot in the London scene is where you have, in fact, this is I've probably know about 7 people that have done this, where there was a person that had an idea, had no money, no idea, in fact, very new in business. In fact, one of them never been in business, and they needed to raise something like 500 grand just to get it running, and so what she did was that she basically recruited everyone that would be perfect for it, because she knew that going to raise capital, if it was just her, she'd literally just come out of maternity leave, hadn't been in a job for the last 5 years or whatever. She wouldn't get any money, so she then basically spent a year, best part of a year, trawling Facebook and LinkedIn, and she, on paper, got the CEO, COO, chief, like head of product, head of sales, and she found a team, I think about 7 people, and they all worked for free. And so her pitch to them was, "Hey, look, I've got this idea. I'm going to be raising money to get it going, and I'm recruiting these positions. And just like a founder puts loads of legwork in to get it, for free. The payday will be once we raise capital." So she got these 7 people, the CEO, the COO, and everything, all helping building the pitch deck, getting the business plan, and then every time she went to raise capital, she took the head of product and the CFO, CEO, because they were the credible ones.
Yeah,
I think a tech type biz, and then she got funding. She got 500k. I don't know what's happened to her since, but. And the risk is, there's no risk, or there's less risk for the investor, because they're not investing in this lady, they're investing in those 7 head shit hot team members.
and this is it. They're created a credibility, hadn't she? She's gone to market, created credibility, because she knows that in the early stages, nobody will, will look at her. And I think, if we forget about the credibility element for a while, I mean, there's a famous story. I don't know how accurate it is, but Facebook made a graffiti artist a millionaire. Did you hear this? So when they took on their first office, the graffiti artist, and they said, "Look, we want this all graffiti, but we can't afford to pay you, but we'll give you some Facebook shares. One day it's going to be worth billions." And then he cashed in as a millionaire. So look, there's opportunity in everything, and what people don't realize is, and a lot of business people will say this, and a lot of business people argue against it. We've never had it so good to reach out to other contacts. You look at LinkedIn, for example. I mean, I'm connected with the head of one of the wealth offices and family offices of the royal family in Dubai. Right? I mean, I've never met this guy at all, but what I post, he can see. We've never had it so good with when you look at LinkedIn, for example, social media, being able to reach out to these people. And it probably won't come as a surprise. This 100 million capital raise for this year, or the 250 million the following year, that came from a contact on LinkedIn that nobody in the organization had ever spoken to before. We've never had it so good in terms of being able to reach out and being able to shout our name and shout our
Yeah. Nice. Steve, your comment about B Sky B. So here's another lesson. Don't do NDAs. I've been in an investment dinner type group for best part of 7-8 years now, and I've sat through probably well over 100 pitches. Every single company or founder that came in saying, "Hey, can you sign this NDA?" They're like, "Get the fuck out of here!" Like venture capitalists, PE founders, etc. They don't have time to sign NDAs for every Tom, Dick, and Harry that comes in. They're seeing dozens of pitches all of the time, and so don't insist on an NDA when you're beginning. That's the easiest way to just get discredited straight away.
Yeah,
and you're starting with no trust. Basically, it's like, I don't trust you. Sign an NDA.
Yeah, and I think Peter Jones famously said it in an interview when he actually turned around and said, "Look, if you don't trust me with your idea, how are you going to trust go into business with me?" And unfortunately, there are people out there that will take something and will be arseholes, and they'll kind of build it as their own. But they're the type of people that you just have to kind of sniff out quite early and avoid being in business with. I just want to read Gary's comment as well. As a dad of two who failed far too slow on one bid, and in the early stages of bouncing back for seasonal bids, evolved because of around my two boys. It's been an awesome live. Thanks, James. Neil, where can we continue to follow and see what you get up to? So
that's my next question. I was going to say, what is your website? Is it neildebenham.com?
neildebenham.com. Yeah.
Here we go. I'm going to share screen.
Yeah, neildebenham.com. It is still under construction on a lot of it, so there's not much there to see. There's some articles on there and so on. My LinkedIn is the best place. The website is being added to and is growing. But yeah, LinkedIn will be the best place to go to on there. Gary, I just want to come back to your point. First of all, well done for that, because it's never easy, especially when you've got children. And building a business around your two boys is amazing. From my point of view, my office is in London. I spend 3 days a week in London, and then I have my daughter 3 days a week, and then work one day is kind of getting my washing and ironing done. But yeah, fantastic, Gary. I think it's great, and I applaud you on that. Anybody who is balancing the stresses of a business with balancing the enjoyment and the stresses of being a parent, absolutely get a big handshake and a high five from me.
Completely agree. Are you on YouTube, mate?
I don't actually think I've got anything uploaded on there. I think I set it up in all excitement before. So there's some interviews I've done there with somebody else. Yeah, I'll tell you what I'll do, Siam. I'll send you all the links, because I've got some interesting articles coming out soon with IFA magazine, Wealth DFM, and so on. So I'll send you everything, and we can. Oh, there we go. I'll send you everything. But yeah, it'd be good for you guys to kind of look and see what I'm up to and so on. And my audio book goes live tomorrow.
Woohoo! On Audible.
Yeah, on Audible and iTunes.
What's it called? Pitch Perfect?
No, so that's the 7 Deadly Sins of Business. And then I've got Pitch Perfect coming out towards the end of this year. And then next year I'm targeting start up to success. So the first 3 years, taking your business through that incubation period. I was saying, Siam, I think we were saying this offline, I've got a pilot TV program that we're filming. Oh no, I said it a little while ago, didn't I?
Yeah.
TV program that we're filming towards the end of this year, that we're going to try and pitch to either Channel 4 or Netflix as well. So be interested to see how that goes. So there'll be, hopefully you'll see my 41-year-old face around a bit more.
And last and most important question before we close it for today. Yeah. What color is your new Ferrari?
My new Ferrari. So I can't remember the technical Italian name for it, but it's a dark metallic grey, but it's got hints and tones of kind of brown in it. Yeah, I mean, I'd like to say metallic mushroom, but I know that makes it sound horrible. But it's very, very nice. I like it a lot.
Sounds like rock band Metallic Mushroom.
Yeah, it does, unfortunately. But no, I'm on a car strip down now. I'm gonna kind of just start kind of. It got a bit silly last year. Just bought and got excited. So, but if it helps, I've got an aerial atom for sale if anybody's interested.
Set up a car club. All your cars and
I know. Do you know the thing is, it's nice to have them, but it gets to the point where they just sit there. They just sit there. I mean, one of them I haven't started for 3 weeks. It's just silly. But that's
2 miles. Yeah. Sorry.
Yeah, but I my Tesla's now gone. The Tesla's gone. So
yeah. Nice. I do 2 miles of driving a week these days. It's ridiculous. Before lockdown in March, I was doing loads of miles, and now I literally just sit in my underwear all day, looking at the sheep outside.
And just looking at these 2 comments here. So, Steve, you'd love the Atom. Your friend has one. It's an awesome car. I bought mine in November, and I've driven it 3 months since. But Steve, I'm afraid your comment got overshadowed by Peter's, because he said he'd buy skincare from me because I look half my age. So I'll take that all day long. Thanks.
Awesome, mate. Much appreciated. Thanks for your time. Looking forward to our dinner date. That's dinner and cinema.
Look forward to it. And thank you for everyone for the questions. If there's anything I didn't get around to, just get in contact on the website and I'll answer everything that I can.
Roger Dodger. Have a good one, mate.
Thanks, guys.
Bye.